The last street ends in the red after Trump threatens to substantially raise tariffs over Russian oil imports. Nifty slips below 24,700, dragged lower by Reliance and banking heavyweights. Financials remain the biggest laggards.
RBI clears the appointment of former Axis Bank Deputy MD Rajiv Anand as MD and CEO of Indusind Bank for 3 years. CNBC-TV18 first reported he was the front runner. The stock cheers the move as the focus now shifts to key management changes and the road ahead.
Anthin has floated the sale of its remaining 5.84% stake in Paytm, becoming the last early backer to make an exit. Triveni Turbine slipped on disappointing first quarter numbers. Revenue and EBITDA fall over 20%, while Aurobindo dips after reporting numbers below estimates.
Hello and welcome to Markets Forward, your go-to show where we aim to get you all the key data points from trade today and, of course, and prepare you for the next trading day. I'm Sudip, and with me is Ekta Batra. Ekta, once again, the red color back on the screen today.
Hi, Surbi. Yes, absolutely. You know, the tariff situation seems to be really dampening sentiment at this point in time. So, yes, we did have a weak session in today's trading session, not to mention that the advanced decline ratio was also on the declining side, around 1,900 stocks advancing to around 2,390 stocks declining by the end of it on the Bombay Stock Exchange. So, yes, the Nifty slips below 24,700. The markets did see that profit booking take place, and the Bank Nifty, which underperformed. Net, a session which you don't really want to discuss too much, considering that, you know, the uncertainty and the headlines change constantly now.
No, absolutely. And I mean, today, even the mid-caps could not really hold their own. And we had a negative advanced decline ratio, and the mid-cap index itself was under pressure. So not too much to cheer. And many of the sectors, in fact, most sectors in the market were under the weather today. So a pretty widespread fall at that. But of course, there were individual movers and shakers and some bright sparks as well. And we'll talk about that as we go forward. So let's tell you what's lined up on the show today. We'll be tracking all the key news and the developments coming up. And the key movers and shakers include names like Gokuldas, Triveni Turbine, Keystone Realtors, big moves, some of them linked to tariffs, others linked to earnings. So we'll talk about that. Then we, of course, look at some more names, including Indusind Bank, Aurobindo Pharma and Godfrey Phillips. Godfrey, of course, was one of the key stars reacting to good earnings today. And then, of course, we'll talk about the key cues to watch tomorrow as well. So lots coming up. But let's, as always, kick it off with the movers and shakers of the day. We have Hormuz joining in with the action. Hormuz.
Some interesting movers that came in today's session, be it earnings reactions, be it news flow. But the one pocket that was bleeding in today's session were the textile names, and for obvious reasons as well, because of this tariff situation on the course of deteriorating further. And that has resulted in stocks like Gokuldas Export seeing a 9% knock in today's session. And not just Gokuldas, most of the others, but take a look at KPR Mill. That was the surprise package because it saw a sharp spike towards the close of the trade, and it ended in the green compared to most of the others that ended with losses. Earnings reactions continued plenty. Triveni Turbine, of course, was the big underperformer today, 10% lower. On the flip side, MTAR Tech reported results just a few minutes before closing. It ended 10% higher in today's session. We just spoke of Prakash Industries a few minutes earlier. Another earnings reaction, almost 12% higher on that stock. Sanofi was up 10% as well. So earnings reactions on the extremes. Keystone Realtors too, ending 5% lower after margins halved during the quarter. Newsmakers of the day, of course, PSP Projects was in the news yesterday because of a big block deal. It was the promoters that offloaded stake. That stock came off the highs. At one point was up almost 8-9%, whereas came off the highs to end 3% higher. BSE, of course, of the CNBC-TV18 news break. Tata Investment came out with results yesterday, approved a stock split, and it built on to those gains. And of course, Adani Ports after results, and Solar Industries, with most of the defense names seeing a bit of a move on the upside towards the close of the trading session. And lastly, in a market like this, there were stocks that ended at a 52-week high as well. Another high for Datamatics, another high for Godfrey Phillips as well, 10% higher after its results. And JK Cement doing well for itself at a 52-week high. Back to you guys.
Okay, all right, Hormuz. Thanks very much for that. Those were the top movers. And let's now go across to our guests. We have Jai Bala joining in to discuss the technicals of the market, and Sudip Bandyopadhyay, who's with us to discuss the fundamentals. Gentlemen, evening. Well, Jai, let's start with you. It's been a weak close for the markets. The key levels that you would watch for going into tomorrow?
Hi, Ekta. The important support is at 24,400 and 23,950. And 24,400 is quite close to the recent low that we saw at 24,535. The fact that the markets are moving lower in a slow fashion with seeming struggle, that's the positive. And that's the indication that we've been, it's in line with our expectation that this is a correction from the July highs of 25,669. So the markets are likely to find support between 24,400 and 23,950. And if the markets were to take out 24,950, then we can conclude the correction is over.
Okay, all right. Got that point. Jai, stay on. We'll have more questions for you in just a bit. Let's also get to one of the main stocks in focus today. And of course, we're talking about Indusind Bank. The shares were up and about, gained almost 1.5% after the CNBC-TV18 News break finally got confirmed. The Reserve Bank of India has approved the appointment of Mr. Rajiv Anand as the MD and CEO of Indusind Bank for a period of 3 years. Ritu is here with the details. Of course, she originally had broken the story a couple of weeks back. Ritu.
Well, big development for Indusind Bank with the Reserve Bank of India approving Rajiv Anand's name for the MD and CEO position for a 3-year term effective the 24th of August. We were the first to report that Rajiv Anand was shortlisted by the board and was a front runner for the position on the 27th of June, and now it is official. A chartered accountant and commerce graduate, Rajiv Anand is a financial services veteran with over 35 years of experience, known specially for his expertise in capital markets. He began his career as a trader at HSBC and joined Axis Group in 2009 and became the founding CEO of Axis AMC. Since 2013, he's been on the board of Axis Bank, where he headed both retail and wholesale banking and rose to become its deputy MD in 2021, retiring just a few days back. And now he steps into a bank which is at a crossroads. Indusind Bank is recovering from a massive loss in the fourth quarter, its worst ever, driven by accounting lapses. It bounced back in the first quarter with a profit, but the damage triggered a string of senior-level exits. The bank's chairman, Sunil Mehta, though, has assured investors that legacy issues are behind and the impact of all these irregularities has already been absorbed. He also outlined a 5-point focus for the bank, including a profitability-first approach, cost discipline and a focus on recoveries. So when Rajiv Anand takes charge, his task will be cut out, and it is a tall order. First and foremost, of course, to stabilize the ship, rebuild the bank's reputation and restore stakeholders' confidence, fix the internal control systems and ensure a sustainable return to profitability while cleaning up the books as well. Equally important will be to rebuild the core team. The bank has been without a CEO and deputy CEO since late April and is currently being run by an executive committee. He must also execute the 30,000 crore rupee capital raise to make sure that the balance sheet is strengthened while also managing the ongoing fallout from the accounting lapses, the MCA probe being the latest.
Okay, all right, Ritu. Thanks very much for that. Sudip, what would your view be on this management change?
Well, I think this is the best possible outcome for the entire, Indusind Bank. Rajiv is an experienced hand and he understands this business pretty well. His experience in the financial markets, in different parts of financial markets, will be invaluable. And he's the best man for the job. That's what we believe. He has a long journey ahead of him, and because a lot of things needs to be set right in Indusind Bank, particularly internal systems, processes, and the controls. I'm sure he will focus on that. Of course, he has to also focus on profitability, and instead of being inward looking, he has to ensure that the bank does the right thing and also is outward looking. So basically, continues to expand business. So I think Indusind got a best possible deal under the circumstances. We'll keep waiting and watching. I won't rush to buy Indusind. I think it's a journey. It's not a one-day event. So we will keep watching the space.
Okay, all right. That's advice on Indusind Bank coming in. Gentlemen, stay on. We have lots of other stocks to discuss as well. A lot of stocks today were in the news. There was Paytm because of the large trade that took place. Angel One that came out with the business update. There was Triveni Turbine, which fell very sharply on numbers. There's, of course, Godfrey Phillips, as we told you, which was one of the better stocks, up 10% today, reacting to Q1 performance. Pharma is here with the details. Amakshi.
Well, Paytm was in focus today because Antfin sold its entire nearly 6% stake. It was actually 5.84% in Paytm for nearly 4,000 crores. So therefore, the stock was down and out in trade. Apart from that, Godfrey Phillips, on the other hand, reported a very good set of numbers. Revenue surged by 37% on a year-on-year basis. The margins, however, came under a tad bit of pressure, and that is because of leaf tobacco inflation. In addition to that, they've announced a 2:1 bonus issue, so that again pushed the stock higher in today's trading session. Triveni Turbine, on the other hand, saw its revenue dip by almost 20% on a year-on-year basis, and this is because the company's orders as well as dispatchments were sort of delayed or pushed out into the subsequent quarters. The order inflows too were very weak, down almost 16% on a year-on-year basis, and therefore we did see Triveni Turbines fall in trade today. And lastly, Angel One was in focus. Of course, we did have the monthly business update, which included the gross client acquisition, which saw an uptick of almost 17% on a month-on-month basis. The average daily turnover too saw healthy growth of 18.6% month-on-month. But what the market share also improved across the board. But what actually overshadowed this good business update is the fact that sources told CNBC-TV18 that SEBI is considering to curb weekly expiries as well as increase the margin requirements. So that sort of pulled all of the capital market stocks lower, and Angel One was one such casualty.
Okay, all right, Pamakshi. Thanks very much for that. So, a whole range of stocks which were in focus today. Jai, I'm going to toss it over to you. Do you have any view in terms of the technicals of, say, Paytm as well as Godfrey Phillips?
Yeah, Paytm is bullish, but the momentum is for the short term is quite strong. But the risk rewards from these current levels of 1,000 odds isn't that attractive. So if you're already holding, then you can trail that with a stop at about say 925. But otherwise, it's not a fresh entry. When it comes to Angel One, it does look bullish, but it's come to very important support. It cannot print 2553. If it does that, the possibility of an uptrend gets questionable. So it must start sprinting higher from tomorrow onwards. So yeah, that 2553 on Angel One is an extremely important support.
Let me ask Sudip on this as well. Sudip, very quickly, every time there's news about some fresh F&O regulation, we see that in capital market stocks, right? BSE included. What's your advice specifically on BSE?
BSE definitely, from a long-term perspective, continues to look good. But yes, of course, all these changes in the F&O regulations, whereby fundamentally what SEBI is trying to do is to reduce the speculation, so reduce the volume of F&O. So that definitely does impact BSE in the short term. So we have to be cognizant of the fact that it is not a cheap stock. So there will be price damage in the short term.
Okay, all right. Well, I'm looking at Aurobindo in today's trading session. That stock was in focus on the back of its numbers. And its numbers were a little weak in today's trade simply because of the reaction that it saw post what was a disappointing quarter, especially for the US business. But a couple of important conference call takeaways from the company. They said that the weaker numbers were due to lower Revlimid generic sales sequentially. They've maintained their FY26 target of high single-digit % growth, excluding a transient product, and EBITDA margins should be similar to FY25. So to put it into perspective, this quarter, Revlimid generic sales were down by 150 crores on a year-on-year basis, and that's the reason why the US business was lower. However, Europe did well for them this time, and they expect 8 to 9% growth in Europe going forward, and the rest of the business growth to be around 10% as well. But overall, recovered from the day's low, but nonetheless a bit subdued in today's trade. Sudip, any view on Aurobindo?
Well, I'm a little careful, Ekta, on these entire pharma companies which sell quite a lot of their, business in US. There are too much of volatility. One doesn't know where things will settle down for them as far as their US business is concerned. So I will be a little cautious. If I have to look at pharma, I will look at companies having significantly large domestic business. Let's say a Mankind, which has got 90-95% of their sales coming from India, or some other companies which have got significant businesses in India. If I look at the overall healthcare care space, I will definitely focus on the hospitals, which to my mind have a much longer and better runway compared to some other sectors as things stand today. I'm not saying pharma is not good, but as things stand today in the world, it is better to be careful.
Absolutely, take that point. Perhaps less confusion and more certainty, because hospitals have been reporting good numbers and rising patient volumes. Okay, let's now address that story I was just referring to. We were just discussing BSE with Sudip. Now, here's the latest. The Finance Ministry, we learn, is in talks with the market regulator to curb options market speculation even further. According to sources, the Finance Ministry and SEBI have been discussing ways in which options market volumes can be trimmed and cash market volumes can be increased. Sources say that the government thinks weekly expiries are not being used for hedging, but only being used for speculation. And that is what caused the decline on BSE. Let me take this up with Jai as well. Jai, just looking at the chart structures for a lot of these stocks, BSE included, and several others. I mean, they've been high flyers in the past, right? Whether it's a Angel One or a Novama or 361. What are the charts telling you now?
The high of June, July may not be the final high for BSE Limited. I'm still bullish on it, but the short-term correction still has little room to run. So it's a more a medium-term pick than a short-term upsides to work with. But reasonably confident that the 3,000 odds levels that you saw earlier in June will get exceeded, possibly stomaching short-term headwinds. And Angel One, as I pointed out, it's very close and important support. So yeah, but BSE Limited, MCX are slightly better than Angel One.
Okay, all right, Sudip as well as Jai, we're going to leave it on that note. Pleasure speaking with you all this evening. Thanks very much for joining in and taking us through your thoughts. With that, it's time for a short break, but we'll get you all of the top corporate voices of today as well as the events to watch tomorrow. Welcome back to Markets Forward. Let's get to the corporate corner for today. First up, we have Shree Cement. The firm's management has indicated that the company is prioritizing a value over volume strategy. The management said that it would see a volume growth of 4 to 5% in FY26 and expects to maintain its revenue growth guidance of 9%. The management further added that its market share is expected to remain stable in FY26. It had guided for EBITDA per ton in the range of 1,350 to 1,400 rupees per ton.
Okay, and next up, we have Sarda Energy and Minerals. The management has planned a capex worth 750 to 1,000 crore rupees for FY26. With most capex planned on the mining side, the management is optimistic that it will bring down the net debt levels to below 500 crore rupees. And the company expects an EBITDA of 2,000 crore rupees in the current financial year.
Next up in the list is Knowledge Realty Trust. The company's 4,800 crore IPO, which opened for subscription today, has raised around 1620 crores from anchor investors. The management says it will use the cumulative 6,200 crores to pay debt and improve the balance sheet. Adds that the firm has a good internal growth story, which is a significant CAGR of 13%. Commenting on the rent segment, the management says month-to-month are below market rates, giving opportunity to increase prices, and that it expects 20% upside potential for increase in rent.
Next up is Marico. The management believes the worst of the raw material inflation is behind the company. The company adds that margins are expected to hold steady and not fall below the current level. Also, the company is projecting 1 to 2 quarters of double-digit volume growth in the current fiscal, and adds that a full-year revenue growth of over 25% is a strong possibility.
We also spoke to the management of OneSource Specialty Pharma. The company is quite optimistic about the second half as it expects significant growth led by a series of commercial launches in the pipeline. The company confirms that it is preparing to launch semaglutide in Brazil and Canada, or be one of the suppliers to the bigger companies. Once patent exclusivity lifts, that's not all. The company's management maintains its FY28 guidance, targets $400 million in terms of revenue with 40% margins, adds that the company is also engaging with firms to develop the next wave of anti-diabetic drugs.
Okay, and with that, let's move on. The RBI's Monetary Policy Committee will announce its interest rate decision tomorrow, according to a CNBC-TV18 poll. The market is divided between a cut and a pause. Ritu is here with the expectations.
The RBI's August policy meeting is shaping up to be anything but predictable. A CNBC-TV18 poll of top economists shows a clear split. Half expect a 25 basis point cut, while the other half say the MPC will hold rates steady. But zoom out and look at the broader macro picture and you'll see inflation has dropped to a 77-month low. CPI is likely to average below 3% through the year. And so some like SBI, for instance, warned that not cutting rates now could be a costly type 2 error, essentially waiting too long and hurting growth when inflation is already under control. But most economists, that is 70%, see the terminal policy rate settling at 5.25%, which means one more 25 basis point rate cut is going to wrap up this easing cycle. On the timing of the rate cut, the poll is split. 30% say August, another 30% October. December leads at 40%, but signaling we're near the bottom either way. On the stance, though, there is no ambiguity. All expect RBI to stick to a neutral stance. But speaking of growth, here 70% believe RBI could leave the forecast unchanged at 6.5%, though the street does expect RBI to flag signs of slowing momentum. On inflation, 90% expect a downward revision to RBI's 3.7% forecast, possibly to around 3 to 3.3% because of the easing food prices and the favorable base effect. As for the tone, 60% expected to stay neutral, but 40% are leaning towards dovish. But the wild card in all of this is tariffs and trade tensions, where half of the economists see no policy impact, while 40% do say external headwinds can push RBI to ease further, but they do agree mostly it's still a wait-and-watch game. Finally, do keep an eye out for the revised liquidity management framework, any commentary on the growth narrative, and the possible extension of the EBLR, which is the external benchmark-linked lending rates, to NBFCs as well.
Okay, all right, Ritu, thanks very much for that. And before we wrap up, we'll bring you some key market events to watch out for. Markshi's here for that.
Well, the most important event tomorrow will, of course, be RBI's MPC interest rate decision. But apart from that, we'll be keeping an eye out on a whole host of cues. Now, on the economic front, we'll be watching out for S&P Global Services PMI data for India as well as the United States of America. Apart from that, keep an eye out on global earnings because they continue in full force. Bayer, Siemens Energy, Walt Disney, Uber, Airbnb, as well as Lyft are some of the companies that are expected to report their numbers tomorrow. Back home, we'll be keeping an eye out on numbers from some auto stocks like Bajaj Auto, Hero MotoCorp. Apart from that, Pidilite as well as the Wislab, and from the capital goods space, we'll be watching out for BHEL. Rights issue, we do have Inox Wind in focus because 1,250 crore rupee rights issue is expected to open for this particular counter. As far as TCS is concerned, they will be meeting with the Karnataka Labour Department over their layoffs, so this will be another counter that we'll be watching out for. And lastly, we have 3 new listings tomorrow, one of them being NSDL, Sri Lotus Developers as well as M&B Engineering.
Wow, RBI policy, so many earnings, new listings. In short, it's a packed day that's coming up ahead. Makshi, thank you so much for that. And with that, I think it's a good time for us to take leave and get ready for this busy day tomorrow.
Yes, absolutely. And you never know with the headlines overnight from the US as well. But nonetheless, thanks very much for watching news and key headlines up next.